As always, wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. It is Thankful Thursday, August 10th, 2023, right? And we're simply looking at gold on a daily time frame perspective. All right. Well, let's upgrade to the weekly, right? So here's the deal. We're going to simply be talking about divergences, breaks of structure, change of character, and trading templates, seven trading templates that I have documented and have seen happen over and over again in the market and on any and every pair. All right, it doesn't matter if you're trading um, major pairs, minor pairs, uh, crypto, stocks, uh, indices, or metals, doesn't matter. All right, so here's the deal. What I see on gold, I see on the weekly price tap to a higher time frame supply zone. And simply this high led to this low led to this high, that's a lower high, and then led to this lower low and broke structure. Price came back into the what weekly supply zone and simply broke this old low and created this new low, tapped back into that imbalance and created a what smaller time frame daily divergence change character, right? Okay, cool. We see that going on. So then this daily right here that we got marked as a weekly high led to this low right here. Okay, led to this low. All right, so we're gonna mark that as a daily structure play. All right, so this high led to this low. That was the period. That was the accumulation in the market. Price went up. Okay, and so the thing about it is this: think of it at the market is a reflection of human behavior. Okay, right here in this area, once price diverged, slanted upward, and this slanted downward, that midpoint right here is called the change of character area. A change of character does not determine a change of trend, but a break of structure solidifies that the trend has changed. Okay, so that's why you see a lot of divergences and changes of character. The change of character, the supply and demand zone that causes a change of character, it fails and it doesn't work once it's mitigated. Because a change of character is not determined a change of trend, but the break of structure does. It solidifies it. It's a continuation. All right. So what we see is that okay, price tapped into a weekly supply zone, created that lower time frame divergence, changed character, price consolidated. And the thing about it is this: um, I believe, as if, like I said, these candlesticks are a reflection of human behavior. This is like price standing on one leg. Okay, imagine a human being standing on one leg. Okay, and you're in control of the Bears. You're the Bears composite operator. You run the Bears. Okay, price has this imbalance. This applies on the cause of change of character. My thing is, if the Bears are truly in control of this market, why would they create not one but two imbalances? They would not. I don't believe it. Something I've been studying. So right here we have an imbalance right here that the Bears created. This is supplies on the cause of change of character. Price consolidated right here. And then we have another imbalance right here. Okay. We have another imbalance. Thing about it is this: the price likes to remain balanced as well as a human. Okay. So this is price standing on one leg in this area. Price likes to remain balanced and not imbalanced. Okay. So I would believe that price, if the Bears will truly control this market, price will consolidate and then push back up to mitigate the supply zone, show a lower time frame divergence, aka Wyckoff distributor schematic, and then go down and create its downtrend and create lows. Okay, but the fact that price created not only one, but then consolidated right here and created two imbalances, I believe that price is going to end up going higher eventually overall. That's one of the trading templates I do have. Basically, when price creates two open imbalances after a divergence change of character, price consolidates and then breaks through. I believe that this price is eventually going bullish. I don't know when, but I believe it eventually is going bullish. And this if this breaks beyond this low right here, then this probably was the bullish move right here. That was the bullish reversal. But the thing about it is uh, the template that I have is I will have TP at least mitigating the bottom of this supply zone, at least minimum. Okay, but let's tap into a lower time frame to see what we have going on. We have a divergence right here, aka Wyckoff accumulation schematic, and we have a change of character. We see price slanting lower right here in the same exact area, and then price slanting higher, right? And the midpoint right here is the change of character area. Okay, boom, price change character. Okay, price consolidated right here after the change of character, right? And then went up again. So my mindset, if had I been paying attention to it, my mindset would have been, okay, cool. This is going to be a reversal, and then I would swing it all the way down here to this low. I'll swing it all the way down there to the low. And so this was a trade that I indeed missed out on. Okay. So here's another divergence on the 1 hour time frame right here. Price landed upward right here, right? 1 hour divergence is on a 1 hour time frame. Let's go to the lower time frame. We can confirm that there's a divergence. The midpoint right there is the change of character area, right? So let's mark up like a change of character. Cool. 1 hour change of character below. Right. Okay, cool. So now we automatically have a supply zone because price divergence change character. This little consolidation right here is an automatic supply zone. Okay, and you can see how price did what. This was a 1 hour supply zone. Price simply came back, tapped right into it, and sold off. So this right here is also a divergence. Price accumulated in order to pull back up to here. Okay, so watch this. Price landing lower, right? And then price landing what? Higher, in the same exact area on the RSI, right? So it needed that accumulation and reaccumulation right here in order to get back to here in order to create a lower time frame distribution. So right here, we have a bearish divergence, okay? You can see how price is doing what? Slanting upward right here. You see how price is slanting upward, and then on the RSI, you have the complete opposite with price slanting low. Okay, so here's the deal. This is the 1 hour structure. So the 1 hour structure, you can mark it like this. This is a high. Okay, this will be a low, the divergence. Okay, come back. Price created a high, lower high, and then guess what? This now becomes a break of structure because price created a change of character back here. This low, the next time it breaks, and now becomes a what? Break of structure. Okay, this is now considered a 1 hour break of structure below. All right, so then guess what? We look at, okay, cool, it broke structure, right? Now we thinking, hey, let's put our zone on the next what? Imbalance, right? You see how price consolidated, and you zone it around you zone it around this entire consolidation, okay, from wick to that wick, okay? And so make this a 1 hour supply zone, boom. You can see how price simply did not mitigate this area. It has not been touched. So this may be liquidity later on in the future. We don't know, okay? So price broke structure, right? Created this low. So we can mark this as a low, right? And then price came up here, and then price did what? Broke lower again, right? So we mark this as still a break of structure, even though it did not mitigate the supply zone like we wanted it to. It's still a break of structure, or it depends on how you draw it. Depends on how you draw it. You could have said that, okay, cool, price mitigated this area right here, and simply you can make this, okay, well, this is a lower high, right? And then this would be a lower low. Okay, price simply broke structure right here, create a lower low, right? So now you're thinking, okay, now let this be the supply zone, right? Because now this is an imbalance. So we just We call this order flow, just following the flow of orders. Okay, so now let's see what we have. Uh, let's go to the lower time frame. So what's up? You can see how on a lower time frame that price diverged right here on the 15. Right, slanting upward right here, and then you got price doing what? Slanting low. Right? Change the character area. Okay. So what we'll do is when we're going to go back to the 1 hour time frame, and we're going to mark this as a high. Okay. Even though the divergence doesn't show on the 1 hour time frame, when you go down to the 15, it does. Okay. Still a divergence, and then midpoint is still a change of character area. Okay. And so we're going to simply say a 15-minute change of character below, because that's indeed what it is. And then we're going to simply zone off our what? Supply zone that caused the change of character. Zoning off our supply zone that caused the change of character. Okay. This may be equal high liquidity. You see how these are equal highs? So we can label this as equal high liquidity and say, hey, we have a 15-minute liquidity above. All right, we have probably some equal highs right there. So, and we're going to mark this as a 15-minute supply zone. Okay, so now price came through, consolidated, right? Probably took some liquidity out below here, and this was NFP. Okay, so then we can mark this, select the 1 hour time frame and mark this structure. Let's see, mark this as a low. Right, got some liquidity right here, and then we could say, hey, price decided to do what? Break structure again. Right, 1 hour breaking structure below. All right, and that means you see how price tapped into the supply zone right here. Let's go down to a lower time frame. See how that is. Price tapped into somewhere right here, creating lows. Price went up and tapped in right here to this supply zone, creating lows, because this is a divergence on a lower time frame. You can't see it on the 15, but you probably see it on the 5-minute. So you can see how price went up, right? It went up right here, slanting upward, and this is slanting lower, and that midpoint is a change of character here. So we're going to simply zone these off, right? Zone these off and say, okay, cool. Price tapped into this zone right here, had an imbalance. Price tapped into this zone, sold off. All right, cool. Because price is going to leave gaps. They're going to leave imbalances. It's supposed to do that. Why does that happen? Because the bearish move is so strong that the buyers weren't strong enough to push the price back to mitigate that supply zone, or the sellers weren't strong enough to mitigate that demand zone before the upward move. Right. So we're continuing to follow structure. Okay, got the imbalance right here. And you see how price tapped in to this supply zone. Got the price change character right on the 5-minute, and then we have a 15-minute supply zone. I'm gonna label that as a 15. And then price simply did what? Broke structure again, right? So this is basically how you mark up structure. You stay with the flow of the market. Okay, so we're gonna say, let's see, this is liquidity, so low. We're gonna say this is a high, then liquidity. We came down here, broke low, right? Let's see, break the structure. Now break the structure below, and price after price broke the structure, accumulated, went back up, and created what? Lower high. So we came down here and did what? Broke structure, created a low, and did what? Went back up here, lower high, and then came down and did what? Took that structure out and created a new low. All right. So you're just following the flow of orders until you have a reason to believe that it's about to reverse. Okay, and you let the market come to you. You do not have to force it. Okay, and this is basically how you map up market structure. This is basically how you map up market structure. Now, what we're going to look for is possibly a reversal, right? We see price has broken lower. So then we're looking for, hey, we have an imbalance right here that price maybe wants to do what? Come back and mitigate. But let's tap into a lower time frame. So the 5 minute, right? Let's look at the 1 minute. Okay. So we have a divergence. What we have right here is a divergence right here. See how price diverged? Okay. 1 minute divergence above. I mean, not divergence above, but 1 minute divergence. And you see that we have price slanting upward right here. Same as that area, that midpoint, that change of character area, right? So we see this as a change of character. Boom. So mark that as a 1 minute change of character above. All right. And so that means this is an automatic demand zone. Because price diverged and changed character, that makes that an automatic demand zone. Okay. So what we do is simply zone it off like this. Let's see. Yeah, we're gonna zone it off like this. Since that's the imbalance. We'll know. Hold up. Came from way down here. So we're gonna zone it off like this. Or even below here. Like this. I'm gonna zone it off like this. This is different. It's 3 different types of ways you can zone off your supply demand zones. You can do a high risk method, a medium risk method, a low risk method. I prefer the low risk method because I want to risk as low as possible. Okay, so right up underneath the base of that candle, this will be a 1 minute demand. Okay, and you can see how you have this M going along. All right. So let's see what's going on. Let's see what's going on. Obviously, price diverged up here. This is where you have a divergence. Price came up here. Let's see. Upward, that's okay. Downward. Okay, so it did not diverge. It didn't diverge, which is great. Okay, it's great, not great, whatever case may be. So the thing about it is, we know our last known supply zone that was mitigated and that caused this new low. This new low that's in the market, where this divergence is at, is this high. So we're going to mark this right here as a 1 hour low. Let's go back to the 1 minute, make sure it's in the correct spot. Okay, cool. We have this in the correct spot. All right, cool. So now we're looking at possibly a reversal. So you know that when these lows are taken, when price creates a new low, that is sell side liquidity being taken out of the market. Sell side liquidity being taken. So my thing is, hey, price may be wanting to respect this area, and if it does, it'll give it to you. So right now we have the RSI coming out of the oversold section of the market, which means there's so many sell orders, the market is oversold. All right, and we'll be looking to go up. All right, but we don't we trade based off of confirmations over here. All right, so let's see, we may get a divergence because my thing is, hey, divergences are like cones or like cone drills or pivots. You dribbling with your left hand to the cone that's on the left, and then you come to the cone and cross over. That's a divergence. You dribble to with your right hand to the cone to the right side, and you cross over. That's a divergence. Or you're a football player, simply going through the cones, do a spin move, go to this cone, do a juke move. Divergences. Okay, pivots in the market. All right. So we have all of this labeled, and then we just let go come to us. We just simply let it come to us. We simply let the market come to us. We don't force it. We trade based off of confirmations. Okay. So my thing is, okay, price diverge and change character, right? Price diverge and change character. And then price came back to what? The demand zone that caused the change of character. Okay, the thing about it is this: one or two things are going to happen. Price is going to either respect this zone by hey simply bouncing off of it, and the buyers are going to gain strength and push this back up and break above this high, create a new high, or price is going to simply disrespect. And then if price decides to fail that demand zone, then you can just simply say, you know what, I'm going to take me a short entry right here, stop loss above the failed demand zone, and then I'm gonna simply, look to the go to the higher time frame, look to the left, and go down to a what? Another imbalance. Okay, you just go down to another imbalance. It's that simple. Okay, so what we have to do is just sit there and wait patiently to see if price is simply going to respect the zone. You can do it based off of uh, price action confirmation. The thing about it is you can do it based off of, hey, I'm waiting. Since price diverged and change character right here, I'm going to wait for another divergence and change the character. Okay, you can do it based off of that. Okay, the more the confirmation, the merrier. And then you got to be okay mentally and uh, cognitively that hey, if the market tends to go away from me, um, don't stress, don't fret. You are patient. So me personally, I will patiently like to see and wait for this divergence to happen if it were to happen and change character. Okay, and this will be the midpoint right here. You see that cursor, right? This will be the midpoint to change the character area. Okay, and I will simply sit up there and wait for it. I will wait for it. I'm not going to sit up here and oh, I'm a force a trade or I'm a force a buy entry right here because patience pays. Okay, and you have to be. Oh, you have your setup. You're disciplined with your setup. Your trading plan. Let the market come to you. It's going to be whether you are active at the charts or inactive at the charts. You're still missing trades. Me looking at gold right now, I'm missing opportunities on other pairs. Okay, but simply let the market come to you because probably maybe 8 times out of 10, it was trades that you didn't allow to flourish and set up for your trading plan, and you took it prematurely, and it resulted in a lesson in the market. We don't say loss, we say lesson because you learn from a lesson, but you cannot learn from a loss. All right. And so we're simply going to sit here and be patient and wait for the market to unfold and come to us. Hey, it had a 1 minute bullish change of character, aka Wyckoff accumulation. Okay, cool. That's what's up. Now I'm looking to see what's going to unfold. If price simply does what? Fail this demand zone, then I'll simply go in for an opposite entry and do a sell and put my stop loss right above the what? Failed demand. Because now this demand zone, this failed demand zone is probably more than likely going to turn into a what? Expected supply zone. So that's that's what that is. So and I have a template based off of. Hey, price came back to the supply zone. I mean, price diverged and changed character right here. Price came back to the demand zone. Is it going to respect it? It's going to do one or two things. Is it going to respect it or it's going to disrespect it? It's going to respect it or it's going to disrespect it. All right. So you can also because this is attempting to be a um, divergence. You can mark this as a 1 minute supply zone. You absolutely can mark this as a 1 minute supply zone. Price may want to come back up there and not change character, respect that supply zone, and continue on the way down. That is also possible. That is also possible. Price fills this demand zone. Looking to cook. We looking to cook with a sell. And so uh, let me get my position ready. Let's see. Let's see. Right, risking 1%. I don't risk nothing above 1%. All right. Let's see. I'm gonna be honest with you. I'm gonna be honest with you. This candlestick closes a bullish engulfing candlestick. I'm tempted to take it, but I don't want to because we have to have an official change of character. We must have an official change of character. If we don't have that, then you know it's like we were asking for it to take the lesson. That is a bullish engulfing candlestick, yes, but that doesn't mean that price is simply going to change character. Price can still simply respect the supply zone and go down. Okay, it can still happen. So we're not going to prematurely take this thing. We're going to be patient. Let's see. If I were to take a buy entry, well, the thing about it is I can't look to take a buy entry right now because I wouldn't know what my stop loss and risk is. Um, let's see. Let's see. I'm not entering this trade. I'm just looking to see what my stop loss and risk would probably be. 81 pips. Okay, you can probably do it based off of 81 pips on gold. All right, I have my lot size. Okay, but I am not in this trade right now. This is just for illustration purposes. So I know what my lot size is going to be. See how price is swinging lower and this is swinging above, right? But this midpoint right here is it's the supply zone, and if price decides to break through that, that is a failed that is a failed supply zone and a change of character. And then the thing about it is, I'll be looking to place a trade on the imbalance down here. If price wants to simply come back down here, you know, or price may want to break above the supply zone, respect the supply zone as a level of respected demand or support, and then fly up. I may sit here and babysit this trade. I may really sit here and babysit this trade. Just watch it unfold. See what's happening in the 5 minute. Price has to change character. I've taken it so many times prematurely, to the point where okay, I had a divergence change of character, which is an automatic demand zone. Okay, price came back and did the same exact thing, but I didn't allow it to change character. Once it came back to mitigate the demand zone and cause a change of character, I didn't allow it to do another divergence change of character. I would prematurely take it off that one candle. Oh, let's buy. And a lot of times I get stopped out. So the thing about it is, I've grown to the point, I'm mature to the point to, hey, I'm okay with missing out on the trade if price leaves me. I didn't lose any money. You have to pay attention to the positive side of things. Everything that happens in your life There's always a positive perspective and a negative perspective, but just because something did not go your way doesn't necessarily mean it's a negative perspective and had a negative connotation to it, right? So I'm okay with missing trades based off of me being disciplined. I'm okay with that. But you see how price is if this closes we're on a 1 minute time frame on gold. If this closes somewhere right here, price has created a 1 minute fair value gap. Okay, and a lot of times a fair value gap is simply a liquidity void where there's an imbalance and there's a gap, and there's some orders right there that need to be filled, and price will simply come back to refill that gap. I'm not saying necessarily it'll come back to fill that gap, but this would be a great idea. This imbalance right here would be a great idea for possible trade opportunity. So we would simply look at it from this perspective. Uh, let's see. Here's the gain. Here we go, gain box. So we simply look at it from wick to wick, like this, and price will simply probably hit the 50% zone, which is called the consequent encroachment. And then obviously you'll put your stop loss down here below the demand zone. But you see how price is mitigating it right now. So we wouldn't be looking to take that trade. So that's all. It's probably want to create an imbalance on the 5 minute time frame. You don't know. You can simply see what's up. And me personally, what I would probably do is, hey, this high right here would be TP1, and another imbalance would be TP2, and then this supply zone right here that created this low would be TP3. That's what I would do. And like I said, these divergences and everything are pivots in the market, and it's very the education of it is very rewarding. It's very rewarding. Doesn't matter what time frame. You can do this. You can absolutely do this. Just let the market come to you. Be patient. Be patient. Wait on your setups. And bam, you execute. You execute your trading plan 10 times out of 10. No, it's not bulletproof, and no, you're going to take some lessons. But you cannot control you taking lessons in the market. You can only control the size of the lesson. So here's the 4 results of how your trade should end. Your trade should end in a small lesson, break even, small profit, or big profit. None of those 4 results hurt your trading account. You consistently have those results over time and not risking above 1%, 1% or less of your trading account. Man, not only am I talking to all of you out there in YouTube world, but I'm speaking volume to myself because I've blown accounts time and time again. I don't know any trader that's successful and disciplined at this time in their trading career that hasn't blown several or numerous accounts to the point where they say, hey, it's time to stop. I'm in year 4, July 17, 2019 is when I began started trading, and obviously July 17, 2023 made year 4 for me. So I felt like, hey, I should start using my platform, my voice, my YouTube channel to create and impact more people in a positive way. There's so many things, so many distractions out in the world that's going on, and I feel as if anything and everything I do, I want to be able not only to impact myself, but to impact the world in multiple ways, more than one. They say a jack of all trades is a master of none, but they forgot to finish the rest of that saying. The jack of all trades is a master of none, but it's better than being the master of one. Okay, so I want to impact the world in multiple facets, more ways than one, creating a positive influence. I have a band right here that says, "Be the good in the world," and that's what it's about. This is exactly what it's about. All right, so simply going to, oh, you can set alerts. You can set alerts. You can set alerts like, hey, a 1 minute alert right here. Say, hey, basically price will alert me 3 times on here, on the desktop, on the phone, on the TradingView app, and through via email. The email I signed up with my TradingView account, let me know, hey, prices hit this area. You know, so this is not set up for me to take. I do not have this pending order, this buy limit in my platform right now. This is just simply an illustration of what was what what would be to happen. Now I had to see what my stop loss would possibly be, so I already have my lot size set. So I already have my lot size set, my possible stop loss, whatever it will be, and then my TP. So think about this: if this were to fail, I I know where I'm headed. I know where I'm headed. It doesn't matter. I'm just reading it reactive, like a defensive back in NFL football or in any type of collegiate football, PE football. Defensive back reading. I'm reading the quarterback's eyes right now, and I'm seeing where I'm be able to pick them off at. I'm gonna simply and patiently wait for price to change character. I'm not gonna look to take it any further because price may, like I said, price may want to come to the supply zone and sell off because the price is going to same thing. Price is either going to respect this area and come through here and disrespect this area, or is going to come up and respect this area and come back and disrespect this area. So we'll see what's up. I got price trap between a supply and demand zone. That's what you want to have. And you just simply, whatever price unfolds, you just simply take it for what it is. Got my account on three different devices. I got it on my phone, got it on this tablet right here, and I have it on my desktop. All right. So my thing is, we're going to attempt to grow a 10K account. Okay, we're going to attempt to grow a 10K account with discipline. I have my trading journal right here. I'm going to simply document and put everything in my trading journal as to why I took the trade and things of that nature. What was the result of it? What was the stop loss? And all of that, and things of that nature. Okay, that's what I'm going to do. I'm going to erase these old trades. You have to be okay mentally. It's not on trades. You're actively waiting on the setup. Also, pick up the candlestick trading Bible, so you're able to. I say KYC, know your candles. Right? Have that all erased. As a matter of fact, let me sharpen this pencil. Where's my sharpener? I can just use this pencil. That's sharpen though. Hmm. Let's see, because I got my zone right there at that wick. As soon as it breaks, we're going in for a sell. As soon as it breaks. The size that it wants to. That bullish of the chemistry looking mighty nice. There's attempting to be a bullish and golden candlestick that's looking mighty nice. It's looking tempting. If you have any questions, problems, or concerns, you can simply reach out to me via my Instagram. My Instagram is OKDJR official. OKDJR official. My Facebook is Orlando Davis. It has my picture of me on it with a white polo on. Same thing with my IG. And yeah, follow your boy, follow the kid. And this is my YouTube channel. Right. So like I said, we're simply gonna be patient. I'm not gonna cap. I really want to take this trade right now. Um, I really want to take this trade right now. But I'm not going to. So patiently wait. Think about it is the bulls are that strong. They're probably leaving in balance. It's open, and then I'll look to place my trade on that imbalance after price changes character. I'll look to place my trade on that imbalance. Even if this trade plays out, it wasn't set up. It wasn't set up for my liking. So if price were to break structure right here, then yes, I'll be looking to place a trade right here because this would technically be a break of structure. Price would simply come up here, break structure, and I'll probably place my buy entry. All right, but that's gonna be all the time that I have. I'll sit here and monitor this trade and see what unfolds. I appreciate each and every one of you for taking time out of your busy schedule in order to listen to what I have to say. It is always greatly appreciated, and I will never ever take it for granted. Have a safe, blessed, and productive rest of your thankful Thursday. Know that I love you, and as I always like to say, God created us on purpose to fulfill a purpose, but more importantly, God has blessed us with our name on it. Always remember, be addicted to information, but not allergic to execution. Never stop learning, never stop teaching, never stop educating, and most importantly, but certainly not least, never stop praying. I will see you all later on this evening, 8 p.m. Central Standard Time, 9 p.m. Eastern Standard Time, 6 p.m. Pacific Standard Time, and that'll simply be 2 a.m. Nigerian time. And as always, may God bless. Y'all take care.